Oh man, Fantom is down 5.3% as markets tumble ahead of a critical CPI reading tomorrow. Fantom is forming a really worrying bearish pattern in the charts, which I have to bring to your attention right away. Guys, smash the like button. Don't forget to subscribe. As always, check out the links in the description to buy crypto using BYBIT or BITGET and claim your bonuses. As you can see here, guys, Fantom was forming this longer term rising broadening wedge, which we tried to break down to the downside. We tried to then kind of build some control to the upside, but we were never able to get into the top half of this broadening rising wedge. So it's always had you worry that if the longer time you spend down here, you could be breaking to the downside. Since then, we did see one bit of good news in that we were able to post a higher high. This was good news. If you remember, if we go back to the Bitcoin chart, we were not able to get that equivalent higher high. See here, this was the Bitcoin high and you missed it yesterday. On Fantom, however, you were able to go post that higher high, which is good in terms of creating an upward trend, but we are getting that dump ahead, and this is due to the volatility leading up to CPI. We can see weakness in the broader markets. If I show you the broader markets, you can see here that the US major indices are down. You got 0.3 down on the Dow, 0.6 almost on the S&P, and 1.5% on the Nasdaq. And particularly the Nasdaq, which we know is correlated to crypto, is getting smashed today because of a bunch of chip makers producing weak earnings and giving poor guidance outlook as well, including major player Nvidia. Okay, so that's causing a bunch of concern in the market. That is what's leading Bitcoin to fall 3%. Fantom down 5%. Remember, the coins which are moving faster when Bitcoin was up are naturally going to fall a lot more, but they do have room to fall. Now, the worrying pattern which I want to share with you is this one. Look at this here on the 4-hourly chart. Fantom is forming what is called a rising wedge. Now, the issue with the rising wedge is they're more likely to break to the downside, okay? So we do want to take a look to see, do we start leaving this to the downside? You can see literally just before recording this video, on the previous 4-hourly candle, you did have a wick below this trend line. You can see the bears are trying to push it down. The bulls are hanging in there for a bit, trying to get a bounce back to the top of the channel. But right now, we need to be cognizant of the fact that if we do fall to the downside, we could be looking at potential prices of all the way back down here at the bottom of the wedge, which don't sound fun, but that's the technical target, back down to 22 cents. Now, of course, before then, you can have a bunch of support. Hopefully, you can bounce from 32. You've got a bunch of support coming in at 28 as well. So it's not like I'm saying we're going to head straight to 22 cents. But if you do break out from such a pattern, that would be your technical target at the bottom of the wedge. So we need to be very, very wary of that. If we bring out our 4-hourly EMA ribbon, this is the other worrying sign. You will see that we managed to flip our EMA ribbon bullish here on the 3rd of August, okay, so just over 6 days ago. We then managed to ride above it quite nicely, but just here in the last 4-hourly candle, look how we dipped below it and showed some weakness. If we lose our 4-hourly EMA ribbon, that won't be fantastic news here for Fantom on the short term. Now, of course, we know this is going to be hugely correlated to Bitcoin, and Bitcoin right now is showing equal weakness, right? Unable to hold its EMA ribbon here on the 4-hourly chart, bullish, again, wicking back down below, and Bitcoin looks like it may want to come down and test this level at 22.5 to 22,000 range, in this range. Remember, you've got horizontal support here from the top of the channel here on this green line. You've also got diagonal support from our long-term trend line here around the 22.5 level. So we need to find out, what is Bitcoin going to do? Is it going to come down here and build some more strength for a fourth attempt at the 24K level, or have the bears just said, nope, we're too strong, we've sent you down once, we've sent you down again, and we're going to send you down a third time? That is what the technicals are showing. Now we need to blend across the fundamentals, and we know what the fundamentals are saying. The fundamentals are saying that we're waiting for this CPI reading tomorrow, and we need to see it come down. We need to see that 9.1 figure notch down to 8.7. If we see anything like 8.7 or lower, we could see a rally from the markets. But if we just see 8.8, 8.9, 9.1, and God forbid if it's higher than 9.1, the market won't be too impressed. Particularly if it's higher than 9.1, you could expect to see big red days, and I wouldn't be surprised if Fantom starts playing out that negative scenario I shared with you and Bitcoin starts falling back below 22,000 here. So that is what we need to look out for. And another thing to note is we need to look at the Dixie. This is the dollar index, okay? Remember, Bitcoin is inversely correlated to the dollar index. And I've warned about this a few times in previous videos. We do not want to see the dollar index bounce. The reason Bitcoin's had a little bit of strength recently is just because the dollar index was coming down to test support at its EMA ribbon. So if we see a powerful bounce here from the dollar index, in other words, the US dollar gets stronger, that could signal a bad couple of weeks for Bitcoin. So that's what we need to watch out for. And this key level is going to rotate around this 24 level. Either we're going to break 24,000 on Bitcoin with good catalyst from CPI and we can start rallying towards 28, 29, or that negative CPI is going to throw us back to the downside and we end up back into our channel at 22,000. Those are the scenarios I'm personally looking out for. Now, it's important to remember Bank of America released a note. They said, we expect the US dollar to remain strong for the rest of this year. The overheating US economy and the hawkish Fed have a lot to do with the strong US dollar. For the US dollar to weaken, in other words, for this Dixie, this dollar index to start falling, we need to see the Fed has to be more concerned about growth than inflation. Really important nuance that we need to understand. Right now, what is the Fed focused on? Fed is focused on inflation. They want to bring inflation down, and for that reason, the US dollar can rally when we see those situations play out, which is not great for Bitcoin. When the Fed rotate to worry about growth, that is when we can see the opposite happen, and we're not there yet. And Bank of England have said the same. They don't think we're there yet. They're economists over there at the Bank of England. So let's take a look here back at Bitcoin. And what I want to share with you is you can see fear and greed index is at 42, okay? People are FOMOing in on this market. Price hasn't moved that much. If we come back into the charts, price hasn't moved, right? If I show you, if I remove the EMA, let's tidy things up. Where we're at now is no different to roughly the price points, you know, we were here in a month ago. 4 weeks ago, we were about thereabouts, 22,000, 22.5. The price hasn't moved that much, but the fear and greed index certainly has changed. People are feeling a lot more confident, and you've got a lot more people talking about a potential relief rally, which is why people are jumping into the market. This is one of the reasons why I wouldn't bet against the market right now, and one of the reasons I'm in on this market, because when that FOMO comes in, when the retail investor and the attention comes in, Bitcoin can do some really irrational things. It can even not pay attention to macroeconomics at time and just go on crazy short squeeze runs, because that's what the market wants it to do. That's what retail investors are buying for. So it's important for me personally to be in the market such that I don't miss any upside. But at the same time, I'm cognizant of the fact that we're facing this pattern here. We could be coming down to the trend line. If we lose that trend line, we could be heading to 22,000. It's my responsibility not just share with you the bullish patterns when we see it. I've shared the bullish target, right? If we break above 24,000, I want to see a run up to 28, 29, 30. But if we're unable to do that, and you can see again, guys, we've got our third rejection from the 24 level, we need to see where we're going to pick up support from next, and the long-term trend lines are the ones I'm sharing with you. Similarly here on Fantom, you've got this rising broadening wedge, this rising wedge. You need to be wary of the fact that if we lose this wedge, your support does not come in until here. Let me just give you those exact levels. Your support doesn't come in until the different pivot points here. So you can look at your first pivot point around the 32 cents. Then I'd be looking at 29. And then if it fell to here, you're looking at 22 cents at the bottom of the wedge. Those are your levels here on this rising wedge, which is a bearish pattern, which we need to be familiar with. Similarly, on the daily chart here, if we bring out the EMA ribbon, you can see Fantom does have a little bit of room, okay? So I wouldn't panic completely until we see us get this break below this wedge and a confirmation candle. If you saw two candles here, two daily candles showing that it's breaking from this wedge, I'd get a little bit worried. But for now, if we do get a rally on Bitcoin, we can see some support come from the EMA ribbon here on Fantom. So you've got that last level of support level here of the EMA ribbon. So there you have it, guys. Volatile markets, exactly as I mentioned on Sunday and on Monday. You can have a crazy green day on Monday, and then Tuesday can be a dump, and even you can get a rally before the close today, and then crazy movements thereafter tomorrow once we get the CPI reading. We'll be covering off the CPI together tomorrow, so make sure you've hit the like button. Make sure you got your notifications on so YouTube don't fail to notify you. Also, make sure you're in our Discord, ijaz.uk/Discord, and Telegram groups. They're completely free, but that way you don't miss any content or any important macroeconomic news. Don't forget to throw a do onto the moon boys below, and I'll see you in the next one.